happy 2020 everybody. Welcome back to the channel. My name is Josh, and in this video I'll be going through a public portfolio update on the Sharesies public account. So if you're new to this channel, I have a public portfolio. At the end of each month, go through a fund update and sort of track the performance of the public portfolio, and I show you all my positions within this public portfolio. Okay, so that is what the public portfolio series is about. You can check out the previous episodes where I sort of go through monthly updates and my thoughts around the market, the stocks that I hold, about dividend stock investing and all that, because this portfolio is a dividend portfolio, and the dividend within that portfolio is expected to grow into the coming years. I have a few plans for this portfolio in 2020, but one of the big sort of key developments I think would be the doubling of contributions. So currently I've been contributing $35 to the portfolio. So what I want to do for 2020 is to double that portfolio contribution from $35 to $70, as I mentioned in my goals for 2020 video. Okay, so if you haven't seen that video already, check that out. If you haven't signed up with Sharesies, I have a referral link down below where if you sign up using that link, you get $10 for free. I get $5, and all of that $5 from everyone will get put into this public portfolio as well, so you can watch the portfolio grow. Okay, so that's a great way to show your support to the channel, to keep me doing what I'm doing with this channel. Before we go any further, I'm not an authorized financial advisor. Nothing that I say in this video is financial advice. This is purely for entertainment purposes only. Without further ado, let's really get into this portfolio, and this is the last portfolio update for 2019. Okay, so here I have the portfolio value of $2,249.58. We go here, we have a total return of $153.78, which represent a percentage return of 7.19%. So that was the first day where we bought stuff, and you can see we started with a loss of $2.45. And then each week I've sort of been contributing $35 to the fund. I also contribute extra $100 for every 100 subscribers that we have. So we're close approaching that 300 subscriber mark. So when we hit 300 subscribers, I'll deposit in another 100 as well. So it's been slowly growing. As you can see, the returns $30, around $30 in October, and then now it goes up to $50 in November, and by the end of November, start of December, we were at about $70, $75, and then the markets really went up on a bullish run, and we really end up on a strong note with $153.78 returns. Okay, so what I like to do as well is to track the performance against our benchmark, which would be the NZX 50. So looking at the NZX 50 since the 1st of August, which was when the fund was started, and to today, the benchmark has returned a percentage return of 5.84. Okay, so if you put your money in the NZX 50, when I started the portfolio, you would have returned a 5.84% return. By our standards, we have outperformed the benchmark by about 1.5%. Okay, so a very satisfactory result for the public portfolio. Okay, now to look at the assets that I hold within the fund. So these are the 4 ETFs that I really started out with: 300 in all the overseas funds and $177 within the NZ Top 50 fund. Okay, and these are the individual companies that I hold. So we have Argosy Property, Heartland Group Holdings, Mainfreight, Summerset, Precinct, NZX, and Z Energy. Okay, so now I'll go through each sort of position and show you my dividends that we've collected from each position, as well as the percentage gain or loss. So this is actually quite a good graph. We can see that each of these pink dots is when I have contributed to the fund, and you can see it's been quite consistent. Even though, highs and lows, I've been slowly just adding to the fund. For the Australian mid-cap fund, we have a dividend payment that we've received of $1.99, and capital gains we've made 18 cents. Emerging markets fund, this one we've made a capital gain, so $11.04, but we also have a dividend that we've received of $2.48. and current returns on the value difference is 3.58%. Heartland Group Holdings, a very satisfactory return of 12.82%, and that represents a $21.75 value difference. Dividend payments of $3.31 were received. We have Main Freight here. Main Freight, $2 value difference, representing a 2.9% capital gain, as well as 39 cents of dividend payments. Top NZ, top 50 fund, we have $8.40 of value difference, as well as a $2.71 worth of dividend payments. NZX, this is the stock exchange NZX. This is a $13.87 value difference, and we received a $1.33 dividend payment. Precinct Properties, not much here, 39 cents of value difference and 89 cents of dividend payments, and it's not much dividend payments yet, but what is interesting to note is that we've already received 2 quarterly dividends, so one on the 12th of December and another one on the 30th of September. So 2 dividends already received since we started investing in August, because Precinct pays out dividends quarterly, so each year they pay it out at least 4 times. Okay, so once every 3 months. That is a quarterly dividend that we've received from Precinct. And Summerset Group Holdings, this is our big winner here, 44% return, which represents $117.39. So the value difference is massive because we have a massive return, but also Summerset was the largest position in our portfolio. Okay, so what this means is that when we started the portfolio, the most money, I put in the most money for an individual stock in Summerset. Because I thought at the time it was undervalued. I have done a deep dive analysis on Summerset, so if you'd like to know more about what Summerset is and what it does, I explain everything in that video, so check that out. Okay, it will be in link in the description. And they also pay a dividend of $1.04. Okay, US 500 fund, a $8.78 value difference, as well as a 48 cents of dividend payments. Z Energy, that's our biggest loser in this individual stock category. We have a value difference of $46.56 and a dividend payment of $3.67. So as you can see, obviously the value difference, we lost more money than what we get in dividend payments. Looking back at in hindsight, Z Energy wasn't a good investment to enter into at the time. Okay, and you can see the investment that I made during the fund inception till today. So you can see the value gap, the line above, as well as the pink line. So that gap has been increasing because of the share price dropping. Okay, so you can see we're losing a lot more capital than what we can get in dividend payments. So this is a classic case of a dividend trap, where you get attracted to what seemingly is a good dividend payer, pays a very high dividend, but what we don't know is that the dividend yield wasn't sustainable. So eventually that yield had to drop. And in Zed's case, the yield did drop, but the share price also dropped. So it sort of adjusts that the yield is about similar to when we entered into, if not even better, because of the share price movement. Classic case of a dividend trap at the time that we were entering into this stock. Okay, so Z Energy, we've lost the most on here. Okay. Argosy Property, we've lost $4.18, but we received a dividend payment of $1.17. So Argosy is also another property sort of real estate investment trust, and they pay out dividends every quarter as well. So similar to Precinct, where they pay out dividends every quarter. So that is all of the positions in the portfolio. Now I'll show you the spreadsheet that I made. This basically tracks our allocation in the portfolio, and we can see that Summerset had a 0.5% change because the share price went went crazy. Okay, last month we were at $7.70, $1.20 capital appreciation in the past month. Okay, so the NZ Top 50 fund continues to slide because I've stopped all contributions to the NZ Top 50 fund. My rationale being that I wanted to have more exposure to individual stocks on the NZ Stock Exchange, and the only logical position to decrease in would be the top 50 fund, because that is a New Zealand ETF. I want to increase exposure in individual stocks and reduce ETFs without sort of changing my allocation to overseas assets. And the initial rule that I set out was that the overseas asset makes up more than at least 40% of the portfolio. We're currently sitting at 42%, so we're still within those boundaries. And then nothing else really has changed much. This shows us the change since the prior month, and our portfolio at market has increased by $582. So that is in the span of a month. So I'm very happy with that. Our returns have gone up by 3.28%. So that is absolute percentage points. And so now we're currently sitting at 9.83%. So that 9.83 is different than the 7.19 on the Sharesies account it was showing. And that's because that 9.83% does take into account time weighting. Okay, so that is to recognize that when we drip feed the fund, our percentage return will drop, and so it doesn't take into account how long the money has been in there. So we do an adjustment to get that return amount. So that's a time weighted return amount. Our return amount has also increased by $61 month on month, and our expected dividends has gone up by $14 to $82. Okay, and that represents a dividend yield of 3.66%. In this column here, I have a dividends received amount, and this shows you all the dividends that we've received from our position. My goal for 2020 is to continue to grow this portfolio, to compound really that dividend growth and capital appreciation by contributing more to the fund as well. And I also have put this spreadsheet on the on a Google Sheet down in the description below. Make sure that if you're using this, I know some people have used this, make sure you give credit to this channel. I have, I don't mind you guys using it, but it'll just be nice to let people know where you got this from. All right, like and subscribe for more content like this if you're interested in personal finance and investing, especially in the New Zealand markets. I do cover that quite a bit as well. Okay, so I hope you guys all enjoyed this video. Until next time, guys, take care.